Hey, Savvy Investors, Mike Pawnee here. Today, we're going to be sharing some great insight on how to get started in buying your very first investment property. You know what? Buying an investment property is a great way to create income, build wealth over time, but it can feel a little bit intimidating. You know, if this is your first time venturing into this world of investment properties, then it's normal to feel a little bit overwhelmed by the entire process. Because let's be honest, there's actually a lot to consider and a lot on the line as well. So regardless if you're looking at buying a vacation property, fix and flip, buy and hold, or maybe even an apartment building, you need to be going in with a very clear head and also a strong understanding of what makes a good purchase. Which in today's session, we're going to be sharing a little bit of a Facebook Live that we've done recently on some very important topics that are important to both newbie investors and a great reminder for our seasoned investors as well. So today's discussion will be talking about clarity to your investment goals, how to determine the right location to be investing in, building your ideal investment town, how to properly analyze your properties, and risk management and prevention, and a lot more. So if you learn, I highly encourage you to watch this training session right to the very, very end, as it's going to be extremely informative. So if you are also new to our YouTube channel, welcome. We do cover off 3 key topics in all of our videos: real estate investing strategies, tips and techniques, raising capital for your investment projects, and just overall financial literacy. If that is something that is of an interest to you and you want to learn more, I highly encourage you to subscribe to my channel by hitting the notification button below. And again, I'm actually very, very active and very responsive on the channel. So please feel free to leave comments, ask questions in the comment section below. So without further ado, let's get right into the presentation. I am super pumped about this topic today, about buying your first investment property. Just a quickly show of hands, maybe or a comment or just a thumbs up or something of that nature. Who hasn't bought their first property and maybe is a little bit nervous or is looking to buy their first property? Maybe just give me a raising of the hand. So I know that there's a lot of people in the audience that are just getting started, because technically this is for you guys. This is all for you. So for those of you that are listening today, this can be a very overwhelming process. And it can happen for a lot of us junior investors that are just getting started, and even some seasoned investors, people that have been getting trained lots of education, working with mentors and all that kind of stuff. And so the reality is it can be a little bit overwhelming and nerve-wracking. Get it. And I'm sure for a lot of people that are seasoned investors that are paying attention and watching right now, they all remember this. And it was a very scary feeling. I remember that myself as well. So this is kind of what today's session is really all about. It's about buying your first investment property, just highlighting some things that you want to be aware of. And I want to just kind of share some key things that has helped me get when I got started many years ago. But at the same time, as we've been helping and coaching people and mentoring people through this whole thing, things that we kind of teach and share in regards to helping support you overcome that big hurdle, because it is a big hurdle. It can be really, really nerve-wracking. So that's today's session. That's what we're talking about. And I can't enforce this enough. For those of you that are feeling stuck or maybe discouraged or struggling, but just don't know where to begin, or they're just looking for some guidance and support, please, I can't enforce this enough. Please reach out to our Savvy Investor community. You're not alone. And sometimes in this game, we can feel a little bit alone. And so reach out. We've got some unbelievable investors that are part of the Savvy Investor family that are more than willing to help and associate it, because you know what? We've all been there. We've all understand. So like I said, let us help and let us be there to support you and encourage you to kind of get you over that particular hump. Okay. So like at the end of the day, please reach out, please engage. So like I said, I can't enforce that one enough. Okay. So for those of you that are brand new to Savvy Investor, like I've shared with all of my previous videos, I love engagement. So please, this is not Mike the Pawnee show. Like I said, please engage, share comments, highlight things that really have worked for you. For those that are seasoned investors, especially if you've got questions, please ask questions as you're kind of going along as well. I can't enforce that one enough. Just please continue the engagement, share in the comments, raise your hand. And like at the end of the day, if I can't answer your questions at the end of the presentation, I will make sure that once the presentation comes to an end, I will respond accordingly right away. And for those that are really nervous that don't want to make it publicly, please don't hesitate to send out a personal message, and I'll be make sure that I want to respond and help respond accordingly. Okay, so I hope that makes sense. Give me a thumbs up if we're good. In a second piece to this, as I am learning this whole new StreamYard thing, and again, old dog, new tricks, please make sure you give StreamYard access to your name so I can see, because I can see all your guys' comments, little jokes aside as well, especially on me, which I'm fine with. That's okay. So with that being said, please, if you can give StreamYard an opportunity to share your name, I can see most of you. But at the end of the day, I always want to make sure that I can engage with you guys appropriately as well. So without further ado, let's kind of get going into the presentation about buying your first investment property. So I'm just going to be sharing my screen here with our presentation. And here we go. Oh, look at this lovely guy that's here with a set of keys. That's awesome. So let's go back to the simplicities of this. And so for a lot of us that are brand spanking new and are very, very nervous, it can feel a little bit kind of like this. It's kind of like a deer in the headlights, and it can be extremely, extremely overwhelming, especially when you're just getting started. Is which direction do I go? What strategy do I focus on? For anybody that's on this, does that resonate with anybody at all? Like in regards to, you're on social media, you're here today, you're probably wanting to know, hey, what type of investment strategy should I be focusing on? Extremely feeling very, very nervous. So for us, it can feel very anxious and it's a scary time. And again, like I said, we all resonate, especially from when we first got started. And I know for me, this was a big thing for me because there was not as much information as there is today on social media. And so for me, it was there just wasn't there. And so I was literally like blinders on and trying to figure this whole thing out. And so I kind of understand where a lot of people can kind of feel this way because there's so much information that's out there that it can be so very overwhelming. Okay. And then for some of us, we're taking this action, we're reviewing lots of information. And then the unfortunate part is it can kind of feel a little like this, where it's kind of like a hamster wheel where, you feel like you're actually moving ahead, but you really aren't. You're constantly learning as much as possible. But it's really only confusing people a lot more than helping. I don't know. Does that make sense for anybody? Is that a situation that anybody's in? Because for a lot of people, this is a problem. And for a lot of people, it's called, that whole process is called analysis paralysis. And it's just this constant fear of moving forward. So you know what? I'm going to be productive today. I've just got a couple listings, so I'm going to do some analysis. Oh, wow, look at this thing. This thing runs, this thing has cash flow on this. This is amazing. But really, they just get stuck. And, for a lot of people, you don't want to necessarily get into that same position. So I can't enforce this one enough. And I'll share kind of an example. I remember talking to somebody at a networking event, and he was part of a specific group. I'm not going to mention the group's name because the group is really great, but they were part of this membership group. And this individual was part of this group for roughly 12 years, 12. And he owned 0 properties, absolutely 0. And I just couldn't understand this. He was extremely knowledgeable, very, he seemed to really understand it. But the problem was he was just absolutely scared to death. And so the reality is for a lot of people, this is the position that a lot of people are in. And so they're just absolutely scared. And so I think the important part to start off with is, you got to get out of this hamster wheel. You do have to push forward. But the real question that you've got to ask yourself is, you started considering real estate. You're looking at it. You're part of other groups. You're part of Savvy Investor as well, and welcome to the group. But really, what we want is to not only support and provide guidance to help you guys be successful in this journey, but we really want you to achieve the goals that you have for yourself. And that's the most important. And that's the key aspect when it comes to real estate investing, is really having an understanding of what your why is. Can't enforce this one enough. So let me ask you, for a lot of our investors, what is your why? What is that one thing that is driving you to achieve your goals? What is that specific goal that you're trying to accomplish that real estate is going to provide you? Share that in the comments, guys. So, I highly encourage you guys constantly sharing, especially when it comes to the why, because you're actually helping inspire and motivate other people as well. And as you're talking to these individuals, these people may have the same why as you. And it's just to try to provide that guidance and assistance. And then at the same time, trying to create those connections where you guys are constantly inspiring each other to move things forward. I can't enforce this one enough. But I want to be really clear. Your why shouldn't be about real estate. Real estate is the vehicle that's going to help you get there. Your why is, what is it you're trying to accomplish when it comes to real estate? What's real estate going to help support you get? So James referenced, thank you, James, spending more time with family. Awesome. Great goal. That's a fantastic why. Very, very good. And I'm sure for a lot of people that resonates exceptionally well for a lot of people here as well. Okay. So please continue to engage, continue to share some of your comments. Now, the reality is if you don't know where you're going, how are you ever going to get there? And I can't force this one enough. And so I use the analogy, and it's getting that clarity to your goals. It's kind of designing your roadmap for success. And I use this analogy for a lot of my students quite frequently. It's like driving, say, for example, your destination or your goal is to go to Cancun, Mexico. Okay, so that's the destination. But here in this situation, pretend we don't actually have a GPS to direct you to get there, right? We have no idea. There's no GPS. What do you do? How are you going to get to Cancun other than flying? We're driving there, okay? So really you would pull out a roadmap. You would pull out a roadmap. And in that situation, you'll try to determine how long is it going to take you from this place to this place, and what hotel am I going to stay at for that night? How many nights am I going to stay? And then you would move on. So you would systematically approach that destination. And then you would initially try to get to that specific goal at a specific time frame. You would have a timeline. I'm going to achieve that. I'm going to get to Cancun by the third or fourth day of driving. And I have all these spots pointed out. Okay. Now, for a lot of people, they're literally driving around. They've got a roadmap, they're driving around, but they actually have no destination to go to because they haven't provided that clarity at the end. So that's what you need to do. So for those of you that haven't done this yet, you're getting started, have some clarity to this. Have an understanding of what is it that you truly, truly want. You know, what do you want? When do you want it? How are you going to get there? Okay, so try to provide some of that guidance. So again, it's the destination, this whole roadmap, these goals, your why, that's Cancun. Real estate is technically kind of the roadmap to helping you get to that specific direction. That's the vehicle driving you to that specific area. So have some clarity to that. A goal should not be real estate. A goal should not be, hey, I want to own 20 properties. You know, it's just a property. What is that property going to do for me to get to that specific goal? So one of the objectives that I would look at is, hey, that property needs to be generating $400 a month cash flow. That's helping me get me closer to my goals. So a little bit of a tip that I try to provide, and I share this with my students a lot too, is try to put some timelines in place too. It's great to put goals in place, but when are you going to achieve that? I look at a 1-year time frame, a 2-year time frame, and a 5-year time frame. And so this way you've got smaller goals, and then a little bit of a bigger goal in a 2-year time frame, and then also in the 5-year. Okay. The clearer the goals that you have, the easier it is going to be for you to achieve them. I can't enforce this one enough. Okay. If you fail to plan, you plan to fail. That just goes without saying. And so for those of you, that has to start there. So if you guys are just getting started, you're looking at real estate as kind of an objective that you're trying to accomplish and learn, have some clarity. I've talked to so many investors over the years that really don't have any clarity to their goals whatsoever. And they just don't know. And so take the time, spend it with your spouse and say, what is it that we want to accomplish here in the next 2, 3, 5 years? You know, if you haven't planned your financial freedom or your financial retirement, take the time to review that. What is it that I need to accomplish? What type of lifestyle am I going to live in the next 2 to 3, 5 years? But it has to start here. This is the starting point. You shouldn't be doing a property analysis or anything. This is the starting point, folks. And for those that are actually seasoned investors or people that have invested and haven't done this, take a step back, guys. Have yourself a cup of coffee, set up an appointment with yourself, and actually provide some clarity there. Now, the fun part about this is guess what happens once you've accomplished your goals. Okay, let's say you've accomplished your goals and it's January 1st, 2022. What are you guys going to do that day? What are you guys going to do once you've accomplished your goals? Anybody want to take a guess? Share it in the comments. What are you going to do? What are those things that you're going to do once you've achieved those specific goals? Okay, for those of you that have answered this, the answer is most likely right is you do it all over again. And that's the truth. Is your first goal maybe, hey, I want to buy my first property and I want to have $300 a month cash flow, but that doesn't stop your journey. You continue to evolve and continue to groom yourself and continue to want to take action. Thanks, Todd. Set new goals. That's fantastic. That's exactly it, is you set new goals for yourself so you continue to grow and you continue to strive to be better. And then really the world becomes your oyster. You know, you will see some of the most successful people. Do you think they just actually stop once they've achieved their goals? Not at all. They want to continue to make their lives a little bit better for themselves, or generate maybe more income for themselves so they can live even a further or a better lifestyle for themselves. That's the reality of it. But it is part of the process. It's part of the journey. Once you've accomplished this, this does not stop. So for you, for any of those that are been successful investors on the call, congratulations to begin with. But my question back to you guys is, have you reassessed your goals as well? And have you taken another look at the next step of where you guys are wanting to go? Okay, so that is the starting point. That's where it begins. That provides some of the clarity. And by having some of that clarity, it kind of provides you with a little bit of guidance of the type of properties that you want or you should be looking for as well. So I did this post maybe about 3, 4, 5 weeks ago, actually. And I asked a lot of our savvy investors, what is the most important criteria when you're considering purchasing an investment property? And I had some great feedback, but it was overwhelming. So for those that are listening and paying attention today and are on this live, I'll ask you guys the question. What is the most important criteria to you or for you when you are considering an investment property? Why don't you guys share that in the comments? Let's hear. Let's see if the stats are actually pretty close to accurate to what everybody else was saying. What is it specifically that's important to you? So when you're looking at an investment property, what is your number one or your most important criteria for you? Okay, so I'm seeing cash flow kind of coming in. That's great. Okay, so the reality is for most people, and the way the survey came out, it was actually cash flow, number one. Okay, that was the number one criteria. So for a lot of people, the reason why cash flow was an important criteria is they are looking to maybe offset some of their income. And so for a lot of people, that's what they were looking for. And they were looking to generate an income stream to maybe retire earlier, or they maybe not work anymore or work part-time, or just kind of have a little bit more flexibility in their lives. And it kind of was based on a post that I shared even today. It's really about having additional income streams and looking for different income streams to help support their lifestyle. So the number two criteria that people voted, so 70% was cash flow, 20% was value add, and 10% was actually location. So value add for a lot of people, that was an important criteria because they were looking at generating an equity piece or to gain more equity to repurpose that. Okay, so I always go back. So when you start to look at your goals and what you're trying to focus on, you know, Carolyn referenced ROI. Thank you for that. Nicolette, cash flow as well. So thank you for that. So by understanding what type of goals you're looking for, the types of objectives you're trying to accomplish with your investment, it will actually dictate the type of properties you're looking for. There may be individuals that have got a lot of cash flow, but for them, they're looking at the equity piece, and maybe a BRRRR strategy or fix and flip will work for them. But have that clarity. What are you trying to do? For some people, it's creating generational wealth, lots of equity, or maybe there's further or bigger capital gains for individuals, or just a steady income stream that will not only impact, you know, you individually, but maybe also be able to pass down to your family as well. Wouldn't that sound nice, right? So have clarity to this first and foremost. I can't enforce this one enough. Get clarity to your goals. By having that clarity, it also will kind of help direct you to kind of what type of properties you're looking for. So when you start to look at a particular segment, maybe it's buy and hold that generates cash flow, then you'll have some clarity. It's like, I need to find these types of properties that generate cash flow and I'm looking for a magic number of, say, $10,000 a month. I was talking to an individual today. His goal was $8,000 a month. That's what he was hoping to accomplish. He ran out of capital. He doesn't have any more, but he was looking for ways to try to make that happen. But for him, that's his main focus. He's looking for cash flow to help offset that. Okay. So once you've kind of got that vision, once you have that understanding of what is it that you're trying to accomplish, your goals, the type of property you're looking for, and what you're looking for that property to provide you, the next step is to really kind of understand and really get clarity to, what kind of money do I need? So show me the money, okay? So what you need to do next, for those that are just getting started, you've got your goals set up, you've got all of those things kind of understood, you've got a type of property. Now the real question is, what can I afford? What can I actually buy? So you do need to get yourself pre-approved, but that would be the next natural step that you are looking to proceed with, okay? So you want to talk to your mortgage broker or your banker, and that's how you start. You should not be going out looking for properties yet because you don't know if you have that capital to actually begin with. So go and talk to your lender or your broker first. By doing so, then it'll make your life a lot easier. I kind of use this analogy for a lot of my students too. It's kind of like going to Costco. Everybody goes to Costco, right? And I don't think anybody goes out of Costco with less than $400 out of their pocket. But imagine going to Costco, okay, knowing that you've left your wallet at home. You know that, okay? But at the same time, here you are shopping around, spending 2 hours, if that's, if you're like me, loading up the cart full of stuff constantly, okay? You're loading it all up. But at the end of the day, you get to the register and they're ready to pay, but you just come to the realization that you have no money or you have very little money. That's where a lot of people make a lot of mistakes. They have no idea how much they're able to afford. They may find the perfect property, but they haven't done the preliminary work to begin with to see if that is going to work for them. The mortgage rules are changing constantly, so I can't enforce this one enough. Make sure you talk to your mortgage broker or your banker first and foremost, because you do need to understand what you will be pre-approved for. So then it will give you that determination in regards to, okay, I can afford a townhouse or a condo or a suited home or, for example, an apartment building. So get that clarity first and foremost. Have that understanding so then you can say, okay, this is what I'm able to afford. The banks are going to give me this kind of money. Great. Now I can go shopping. Now I can bring my wallet, put it in my pocket and go to Costco, and I know exactly what I'm able to spend. That's exactly what we want to do. But for a lot of people, it's a big mistake. The fun part is always the shopping part. Who likes the shopping part? I love the shopping part. I love looking at deals constantly. But without talking to your mortgage broker or banker, make sure you get that clarity first and foremost, because the last thing you want to do is start to go through the process of the acquisition and you've just not done your due diligence in regards to what you're able to afford. Drives your realtor crazy, mortgage broker crazy, and it'll drive you crazy as well, okay? So with that being said, just make sure you take that time to actually get qualified first and foremost before you start going shopping for your property, okay? Now, you get pre-approved. Your banker's provided you with some insight. And this is always kind of the interesting part. And you go on to Savvy Investor. So let me ask the question. Post this or share this in the comments, guys. Where are people investing? What cities are you guys investing in? So go ahead, just throw that out in the comments section. I'd be interested to see where everybody's addresses and people are. So post where exactly you are buying. So for me, I'm in Edmonton, I'm in Calgary, I'm in Moncton. So these are kind of markets that I'm invested in. I live in Vancouver, okay? So that's where I live. But for a lot of people, this can be an extremely nerve-wracking process. So once you've got clarity to your financing, you have that understanding, the next real big question is, where do I invest? What city, what market do I go to? And this one can be extremely, extremely nervous. So, for those that are listening, for a lot of people, the most natural process when they're making the selection of which property to go to is to invest in their backyard, just because that's where they live. They know that they can drive to their location. They can see it at any point in time. But the reality is that's not always the best decision. A lot of people just invest in their backyard because it's a comfort zone. They don't want to look outside the box. They're like, oh, I don't know if I want to invest in Ontario that's so far away. I don't know how to do this, right? And so the important part is when you're starting to kind of consider real estate investing, again, it goes right back to it. What is your investment goals? And for those that are living in Vancouver and understand this very clearly, if you're trying to invest in cash flow in the downtown market, downtown Vancouver, even in the lower mainland, cash flow is a very difficult thing to actually accomplish. So sometimes you have to look outside of your backyard for those specific projects that are going to help you get closer to your investment goals. And maybe your backyard is not the best location for yourself. So you have to take that into a consideration. So for those of you that are getting started, yes, it can be extremely nerve-wracking investing in a different market, but I can't enforce this enough. You'll talk to a lot of savvy investors, and a lot of investors are literally investing all over, not just in Canada, down in the States, and in some cases all over the world. And there are ways to proceed with this. And with wonderful technology, I don't have my phone in front of me right now, but with technology, it's absolutely amazing what you are able to accomplish, okay? So don't get so stuck in your backyard. Take the time to open your horizons, open your ideas. And if you don't necessarily know how to do this, reach out. Again, talk to people. It's like, how are you investing in other markets? We've done segments on Savvy Investor in regards to how to invest in your investment town, okay? So the important part is when you're looking outside of your market, that maybe generates more cash flow, provides better opportunities than your own backyard, the key is that you do need to have a solid investment team. Really, really, really crucial, okay? So things that you should be looking for when you are considering another market, and this is the things that you all should be looking at. If you are considering investing in a different market, these are some key things and key criteria you look at. It's not about real estate prices, and it's really something called due diligence. And you've probably heard this before on Savvy and other groups and other things like this. But what is due diligence? Okay, and you may have heard this before, but a lot of people just don't know what this is. So these are some key things that you want to be paying attention to. Okay, so you want to understand, the GDP forecast, which is more economic growth within a specific province. Okay, unemployment rate, construction jobs, average weekly earnings, population growth, tax rates, housing starts, affordability index, vacancy rates, provincial rent increase regulations. Now, when it comes to real estate investing, these are extremely important indicators. And if you pay close attention to this in all the different markets, literally across the country here in Canada, or even in the States, or literally around the world, these are the main criteria to pay attention to. And so if you take the opportunity to understand these indicators, it's kind of like looking at a little bit of a crystal ball, if this is a good market to invest in or not, okay? So it really provides that guidance. Is this a good place to be parking my money or not? The key thing that you want to be looking for and paying attention to is jobs. So when jobs are being created, so if there's a major project that's happening within a specific city in a specific province, more often than not, they'll get an influx of people moving in. And for us as landlords, that's fantastic because they are either renters or they are buyers. And I love renters and I love buyers because more renters coming in means less inventory and more rents going up. And then secondly, if there's more buyers coming in, then it's also increasing the price in the properties as well, which I am very happy with either way. But for me, I am looking for some of these indicators to be extremely positive. Now, for those that understand due diligence, and this may be a really bizarre thing, but COVID has really thrown a monkey wrench into all these numbers because we've seen unemployment rate at an extreme high. And so literally across the country, but here we are seeing real estate prices. So this last year, it's been a really bizarre situation. But the reality is everything is going to provide more, there'll be much more clarity in the next 6 months as things start to open up. Who's happy that things are finally starting to open up? I know I am. But in the next little bit, you will start to see those things start to kind of open up. And this research will provide more clarity into the markets. Right now, it is really bizarre. It's really, really strange. But for those that are paying attention to this, take a snapshot of this. These are some of the things that I highly encourage you to kind of pay attention to when it comes to market research or due diligence in the different markets literally across the city and the country, okay? But these are the key criteria and how it actually works. And I wish I could take credit for this, but I can't. But the Real Estate Investment Network, or RAIN, so they deserve all the credit on this because they provided a really awesome chart about how due diligence plays in the real estate market, okay? And so if you take a look at this, this is their graph. I am sharing this with you because it is public, but it is an excellent chart, and it really provides guidance in regards to how prices tend to go up. So for example, if GDP growth happens, if economic growth within that province and city grows, then really there's an economic engine that's happening. More often than not, job growth happens within that city and that province, okay? So once job growth occurs and there's jobs that are being created, the population grows, and that takes about 12 months. So once you start to see all these projects come up, and be prepared, because the government is going to start to stimulate this economy even more so, and we'll see what happens after September with the election, most likely, or September, or shouldn't say September, this fall when the election happens in Canada. But the reality is you'll be seeing a lot of stimulus to kind of start to kickstart that economy, creating that job growth to get that unemployment rate. So when you're wanting to pay attention to this, where are those major projects going to happen? Where's all this job growth going to occur? And with that happening, you'll see within 12 months a big resurgence of population growth. And as population grows, then you'll get increased rental demand. And so with increased rental demand, decreased vacancies. And guess what? For us landlords, that's fantastic news, because that's more rent or rent increases coming in. And that takes between GDP growth, job growth, from the beginning of GDP growth, roughly 18 months. And then after that, you'll start to see usually tenants or people that are moving into a city or a province, they tend to be renters for the first 1.5 to 2 years. And then after that, they will start to become home buyers. So once they become home buyers, that's when the property increases or property values start to increase as well. And so with less demand or less inventory in the market for properties, guess what happens to prices? And that's what's going on. So you'll see specific cities right now that are seeing a huge influx of price increases right now, because a big change that has occurred is people are now able to work from home, and they're no longer required to be working at an office anymore. So it's been a very big change. So a lot of people are moving into smaller markets because it's much more affordable, creating a big influx of demand. So pay attention to this. This is going to be really key for a lot of people over the next 6 to 8 to 12 months. It's going to be very, very interesting. So pay really close attention. For those of you that are getting started, look at this information, pay attention to this, look at the due diligence, but don't be just closed-minded to just looking in your own backyard. Open your eyes. There's lots of opportunities, because sometimes your backyard just doesn't make sense to hitting your goals. And sometimes you have to expand to a different particular market, okay? So take a look at this, pay attention to this, take a snapshot of this. But it's a great chart. Thank you, Real Estate Investment Network, for providing this graph. It's awesome, really good. So the next piece is, once you've kind of identified a market, it may not be in your hometown, it may be in a different town, but it may be even in your backyard as well, okay? You've got your goals. You've got clarity to the type of properties you're looking for. The next piece that you're going to be wanting to do is kind of really building your investment team. And this one is so, so, so important for those of you that are active investors. You guys all get this. But the reality is, these individuals as part of your investment team are crucial, okay? So the individuals that you will need as part of your investment team to begin with is going to be your realtor, of course, your lawyer, property manager. Possibly you may be self-managing the property if you'd like to, your insurance agent, a banker, a mortgage broker, a lender, and then obviously your appraiser. Those are all key individuals as part of your investment team. So before you start going out shopping, before you start going there, you've determined a market, take a little bit of time and just start to find these individuals. And the key aspect here is team. This is your team, okay? And I want you to think, I don't care if you own a condo, a townhouse, and you're just getting started. As you start to get into the business of real estate investing, these individuals are like employees as part of your business. And so I highly, highly encourage you guys to make sure that you interview your team members to make sure they are the right fit for you. Okay. I'll share a little bit of a story. I had a student here that actually was quite interesting. He was out there looking for a realtor in a specific market, which I won't share, but he was looking out for a realtor. He thought he found somebody and it seemed to be working. It seemed to be okay. But what came back when we were talking about this team member, this realtor, is he does not like to communicate by phone. He only communicates by text. So there's no communication by phone at all. It's all text message. That's the way he operates, and that's the way that he likes to work. So I talked to my student. I'm like, well, this is your business, and your employee is kind of is telling you how he likes to communicate. Do you like that same type of communication in return? And he's like, no, I want to be able to talk to somebody. Then maybe that person's not the right fit for your investment team. So again, they are like an employee to you. Make sure you're finding the right one. Screen these individuals. Take the time to actually network and connect with these types of people. Can't enforce this one enough. Very, very important. If you really want to grow, you've got to find the right individuals to help support you, to help you elevate this. Some other people that you want to look in your investment team, and it may not be right away. And for those that are actually paying attention, or sorry, not paying attention, for those of you that have been more seasoned investors that have been doing this for a while, other people, you may start to kind of look at ways of delegating some of your tasks. Bookkeeper is a big one. Accountant, property manager, again, maybe further delegating this. If you're trying to self-manage right now, you may want to take that into account and say, I'm going to be hiring this out. I'm going to get rid of this. Property management. Contractors, for those of you that are actually doing a lot of the work yourself, you're like, well, disperse that, move that off to somebody else. And then virtual assistants, maybe you've got some marketing or some other things that you need to delegate. For those that are been doing this for a while or just getting started, they own 3 or 4 properties, this may be a direction that will be the second phase to your investment journey as you're getting started, is having a delegation team where you can start to siphon some of this stuff off. So you're not doing everything. It's like that old saying, do you want to work in your business or on your business? It's okay to work in your business when you're first getting started. It's a great way to learn. Get into the nuances of the business so you learn it. But at some point in time, you will limit yourself in regards to your growth because you can't be working at 5 or 6 different properties at the same time. So you got to be able to expand and push yourself out and delegate some of these tasks out at some point in time. But the real question is, how big do you want to go and how big do you want to grow? And so if you want to continue to expand it, if your objective is I want to own, 10 properties that are generating $500 a month cash flow, which is going to produce $5,000 a month cash flow for me in total, excellent. Are you going to self-manage all of those yourself? That's a real question to yourself. So really start to identify, start off with your investment team. So before you start kind of going out shopping, have these individuals organized and planned in advance. So as you see, we're kind of following these key steps to help you get focused on those things that you need to do. Keep pushing this forward. Now, here comes the question for those that are maybe looking outside of their investment market, or they're looking even within their backyard. The next maybe real question is, how and where do I find my investment team? Does anybody here ever have any issues finding their investment team? There's a question for everybody. Has anybody ever had a challenge with an investment team member? I know I have in my past. Like sometimes they just don't actually work out. But your best resource in regards to trying to find team members is by reaching out, and more importantly, is just networking with other investors. You see this all the time on Savvy Investor. People are posting constantly. Anybody know a good realtor or a good mortgage broker? And I can't enforce this enough. Make sure you're making those connections, because another savvy investor will most likely not provide you a bad recommendation. I would only hope not, but they'll provide you good recommendations of individuals. And so you can connect with them, but the important part is don't just depend on what their comments are. Take the time to actually meet up with them, connect with them, and interview them. Okay, so I'll share a little bit of a quick story. We bought our property out in Moncton not that long ago, and that was one of our first acquisitions there. And so we were actually establishing our team out there, and I was working with, we were trying to find a property manager. The cool thing is with Zoom this day and technology right now, I was able to interview multiple different property managers, be able to read their body language through a Zoom platform like this. So like I said, technology is in our side. Adapt to it, accept it, and it can be part of your whole interview process when you're talking to realtors and property managers and realtors. But honestly, like I said, you can have that face-to-face, that real good connection. And more importantly, you can see if they are a right fit for you, yes or no. So take advantage of that technology, but interview them as if they are in your backyard. And like I said, technology nowadays is amazing, where you really don't necessarily need to be there to be able to be an effective investor in multiple different markets. Okay. So with that being said, we've identified kind of a market, we've built an investment team, we've got that all kind of set up. And now the key part is you start to kind of look at deals and you're assessing deals. And that's the other part, is for a lot of people, there's lots of different types of property analyzers and things that are out there as well. But really, once you start to kind of break down these specific numbers, you really want to make sure that you're paying really close attention to this and doing this right, please. It is really about the numbers. We should never, ever get emotional. Use this, don't use this, okay? Be really cognizant of what those numbers are looking at. I've seen some really horrible analyzers out there. I've seen a lot of really bad inputs in their numbers. And that's what I really want to highlight today, okay? So some of the things that you will see very soon, you guys are the first ones to hear this. We're going to be having a new Savvy Investor website that's going to be coming out soon. We've got a new property analyzer you guys will all be able to get access to as well to help you kind of get this launched. So you'll see that in the fall. But the reality is what you guys are wanting to see and how you start to analyze the numbers is to be true to those numbers. Don't get emotional, okay? So to begin with, rent, okay? Be understanding of what your rent range is. So what is the rent range? So if you're looking at a 1-bedroom apartment in Abbotsford, okay, I'll use Abbotsford locally here. If the rent range, so the low end is $1,000, and then the high end, the rent is $1,300, or say $1,500. So between $1,000 is the low end, $1,500 is the high end. Be reasonable with your rent and be honest with yourself of what the true rent is for your property. So understand your rent range first, and then determine where does your property lie in there. And think about what, and really look at some of the comparables when you're looking at it. What does a $1,500 unit look like, and what is $1,000? And where does my property fall in there? The reality is, be honest with yourself, okay? Because if you're not being honest with yourself, the only people that you are fooling is yourself, and that's going to hurt you, okay? So look at the rent, be honest with your rent, be clear with it, understand your rent range. And other things that you can look at is, what are some of those maybe additional income streams that you can maybe take advantage? Maybe you can rent a garage, or maybe you can rent some parking, and maybe there's some storage. Maybe there's some other little income streams that you can generate from the property itself. So take that into consideration. But again, don't underestimate it and be real with that. Take a look at what other people are doing in that area. Are they renting garages? How much rent are they getting? Be very, very clear. Don't inflate the numbers to make the deal work. And I've seen people try to make this all, trying to fit this all in, and you know what, trying to make those numbers work just to get into a positive count. Don't do that. Be honest with yourself. Be clear. Again, the only people that you're fooling is yourself. So just be really transparent with this, okay? So when it comes to that, and that's the income piece. Now, when it comes to the expenses, look at the financing aspect. Right now, interest rates are an all-time low. Haven't seen interest rates like this in a very, very long time. So my honest opinion is, you want to try to predict that there might be a might be an interest rate increase in the near future. Who thinks there's going to be a rate increase in the next 2 years? Maybe just give me a thumbs up or a hands up. Who thinks that the rates are going to go up in the next 2 years? Okay. So the reality is, you know that rates most likely will be going up. Stay a little bit conservative with your numbers. And maybe the interest rate is not 1.5% for the next 5 years. Maybe the interest rate is going to bump up to 2.5% or 2.75%. So put that into your analysis. Be honest with yourself and be very, very clear. The other thing that I'm seeing a lot of is insurance. Anybody else seeing insurance premiums going up these days, or am I just the only one here? But I'm going to tell you right now, the numbers that you are seeing in your insurance or what's being provided to you by the seller as what the insurance costs are will be very, very different than when you go get your quote, okay? They may be grandfathered at a specific rate, but as soon as you get yours, be anticipating that that is most likely going to be about 10, 15, 20, 30%, or in some cases even higher than what the current owner is today. It is actually one of those pieces that you need to pay attention to, and it's actually part of the process. So when you go get your financing approved, okay, take a note of this. When you are about to get your financing or working with your mortgage broker to get your financing approved, talk to your insurance agent and ask them the question, what's the insurance cost going to be for this property? Just because you get an excellent interest rate from the bank that's done really, really well for yourself, your deal may just collapse because the insurance costs are just through the roof and it just kills your deal. I've seen a lot of that lately. So just be clear of it and just be honest with yourself. Look at that, but it should be figured out early on during the condition process that you take a look and get a quote with your insurance. Really, really important, okay? Other expenses you want to look at, property taxes, condo fees, management fees, utility fees. Look at all those things, have clarity to that, build those into your numbers, make sure it makes sense. You may not want to, you may be self-managing your property today, okay? And you've removed that expense. But here's just a little bit of a tip. If you are really wanting to scale your business, and you got to be, again, honest with yourself, do you really want to grow your business? Or are you wanting to manage 30 properties on your own? And if the answer is no, I don't plan on managing 30 properties on my own, okay, then what you should do is build in, as part of your analysis, a management fee. It's okay that you're not paying that today, but at least it's already planned for in the future that at some point in time, this property will move over to a property manager. And I've already built that into my numbers and I'm in a good position and we're good. This is a good solid property. Even with management fees, I'm going to make a little bit of extra money because I'm going to self-manage right away. Okay. The other things that we look at is a vacancy allowance and a repair and maintenance allowance. So the reality is for a lot of people, repairs are going to happen. This is just the nature of the beast. And you will have vacancies for this property. It's going to happen. So you might as well start to build in some of those expenses for yourself. And really from a vacancy allowance, I always like to use whatever the market is dictating of what the vacancy rate is. So if in Edmonton, for example, if the vacancy rate is 8% or 7%, I budget that into my analyzer. So I know when there is a vacancy, those funds have been accrued into our account every single month. So when I do have it, it's already built in and managed there, okay? The second part is a repair and maintenance. And you want to budget those things. You want to continuously budget and accrue for those funds to always have that available at any point in time. So take a look at that. Make sure you kind of accrue for those types of funds because repairs and vacancy will come. Great question from Cheryl. Do you calculate management fees based on cost of property? It's actually, it can vary, Cheryl, but the reality is more often than not, it's a percentage of rent. And it can range between 10 to 12%, but that's why it's really important to have a property manager as part of your investment team to understand what those costs are going to be. But usually 10 to 12% is kind of the magic number off the gross rent. So if you budget that, that's what you want to capture in your analysis. I hope that answers your question, but good question, very good question, okay? So when you're analyzing your investment, these are the things that you're looking at for. Again, please don't fudge the numbers to make the deal work. It either works or it doesn't work. And so, like I said, the only people that you're fooling is yourself. And I've seen a lot of this stuff out there, and I've seen it from other investors and other individuals, and you're really trying to make those numbers work. Don't do it. It either works or it doesn't work. But the real answer and the way to get your answer, does this property get me closer to my goals? Yes or no. It should be very clear. And like I said, if you're not getting that clarity, then this is where you may be wanting to ask for a little bit of advice, which is almost a perfect segue to the next slide, is maybe finding an accountability partner or a mentor, okay? So for those that are just getting started, feeling extremely nervous, but are actually proceeding forward, and you've done your analysis, and you're just like, you know what, I just want a second set of eyes just to take a look at this. And the reality is, ask for some help, ask for some support, ask for people to say, hey, listen, would you mind checking out my numbers? You are not alone in this, so don't be afraid to ask for help. And, you know, I'm honored when people reach out to me and say, Mike, I'm just looking for a second set of eyes on this. And I was doing this even just yesterday. We looked at a couple of deals. I kind of shared my comments on a few things, and, you know, then that individual is able to make the right decisions. But by just having a second set of eyes looking at their numbers, it provides that little bit of guidance that maybe you're not looking at something specifically the way you should be. In addition to that, having an accountability partner or mentor can help kind of motivate you and encourage you, and not to feel not distracted, but feeling frustrated, because the process can feel frustrating, especially when you're going over deals over and over and over again and just can't find the right one. Or say, for example, you're getting caught up with all the Joneses and what they're doing as well, and you're just feeling that you're not able to keep up. Forget about what the Joneses are doing. Focus on what's important to you and what you're doing. And don't ever be afraid to ask for help or some support. By having an accountability partner, it is fantastic. You know what? Maybe I'll just reference this right here. Who is looking for an accountability partner? Maybe you guys can all connect and just raise your hand. I'm looking for an accountability partner. You guys are all investors. Connect with each other, help support each other. We're all here to help each other grow and expand our horizons and really elevate ourselves. Post it out there. Don't be afraid. Say, I'm looking for an accountability partner. Connect with new people and network with people. It's amazing what you can do. I personally have an accountability partner that I work with. He's not in the real estate realm. He's in the business realm for me. But man, I can't enforce this enough, how supportive it is to have somebody there to help, just be there, just to ask questions or answer questions whenever I need it. So again, don't be afraid. Ask lots of questions. If you're looking for some guidance in regards to your numbers, you are not alone. Savvy Investor Group is awesome. These guys everybody would be more than happy to have a quick discussion or a quick review with you for those that are actually looking for this. Okay. So have an accountability partner, take a look at your numbers, and just be really cognizant that, hey, having that support may provide you with that reassurance that you're making the right decision for yourself. Okay. The one thing we did talk about briefly on the analysis, but this one is a really important one. We talked about vacancy allowance and a repair and maintenance allowance. But the one thing that I see a lot of is people don't really budget very well when it comes to having contingency funds, okay? Because contingency funds is kind of like dead money. It's like, well, you know, I've got to put $15,000 away in this account just because I know this roof is probably going to needing to get done in the next 3 to 4 years. And so they really don't want to put that aside for the time. They don't want to put this aside because they want to use that money to reinvest it. And I've seen a lot of that where people don't budget and don't have good, strong contingency funds for when a situation does arise. They've repurposed that money to invest in another project, and now they've got no contingency funds. And all of a sudden, they have an issue not with one property, but now with both, and they've got no capital to fund some of the expenses that are needing to be put into place. Take the time, budget for those expenses, put that aside, park it away, don't think about it. And at the end of the day, leave that there for any kind of emergencies. Guess what? Things are going to happen. This is the game called real estate investing. For those that can appreciate that and have been doing this a long time, they know that stuff happens. That's just the nature of the beast. You will have to anticipate worst case scenarios, but it will be a real ugly if you don't take the time to budget some reserves for yourself. So take some time, put some contingency funds away. If you don't know what you need to budget for, you'll figure that out when you kind of go through the appraisal and the property inspection, and you'll see that. And it'll probably be very evident. There might be some renovations that you need to kind of come up with. There's like, hey, the flooring needs to be done. The windows need to be replaced. Start to budget that stuff and have that part to the side. Don't spend all your money in there. Just be reserved. Don't spend all your money just on the acquisition side. Always park that to the side. The most successful investors that I have known over the last 20 years of doing this have done a really good job just having good, solid contingency funds in their investments. Yeah, you will at some point run out of money. It happens to all of us, but then that will take you to your phase 2 of your investment goals, which is maybe raising capital, maybe in a whole different platform. That's okay. You'll get there when you get there. You don't need to worry about that right now. Right now, the focus is ensuring that you've got the capital, you've budgeted appropriately, you've built good contingency funds, and now you are just continuously moving forward. So here you've done the property analysis, you've built good contingency funds, And now you're kind of coming up to a situation where you're looking to close the property. So this is a final checklist that I always love to use. And it's just kind of like before you remove conditions and you're just about to kind of close on this property, I always like to go with the final checklist just to make sure I've covered everything off. You know, you recheck your analysis, check your rents again, check everything. Look at the review the contract, the purchase contract, the inspection report, condo documents, any individual notes that you have yourself, pictures, mortgage documents. Absolutely. Make sure you've captured everything. Make sure there's no surprises. Okay. Again, review the rents in the areas, maybe reinforce it with the property manager to make sure that those rents I'm going to get are accurate. Yes, 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 yes. And you're kind of checking it off and everything's looking good. And then you do your one last check. I don't know if anybody ever has had this, that gut check. You're not feeling just like, you know what? I feel good. This is looking good. All of my boxes are checked. I like this. This is good. Once you've determined all of these things make sense, you feel comfortable. More importantly, is this is going to get me closer to my investment goals. Sign the documentation. Sign the paper that you're removing conditions. And guess what? Celebrate. Take the time to celebrate those small successes, those big successes. Every little step should be a success. And like I said, the important thing is that you're getting away from analysis paralysis and just following the process to keep moving forward, keep pushing yourself forward. You know, ask for support if you need to, but go through this whole check process to kind of come to the conclusion that this is the right decision. Everything makes sense. All the boxes are checked. It's going to get me closer to my goals, and take the time to celebrate it. Take your spouse out for dinner, take somebody out for dinner, go on a vacation, whatever the case may be, but take the time to celebrate as well. Now, the other piece is it's great to kind of go through this process. It's great to celebrate. There's also a final step is when you officially close on this property, it's completely done. And I know a lot of experienced investors don't do this, but I highly, highly encourage you guys to do this because this is actually a pretty fun little exercise, especially when you see it later on your next acquisition that you do. But do a quick debrief after the acquisition. Okay, so it's kind of acquire, sustain, and maintain. So when you go through the whole process, take notes, lots of notes, as much as you possibly can. You know, for me, I take notes on my iPad. I love it. And so for me, I take every notes on everything through the entire process. And I go through a full debrief on all of the things that went really well, the things that didn't go well, and maybe lessons learned along the way. Other things that I love to do is actually talk to my investment team and ask them the same questions. What went really well with this deal? What could have been improved the next go around? You know, what could have I done much better to be a little bit more effective in this acquisition? Has everything worked out as planned? Has my team worked out as planned? Is the rental income exactly what I anticipated? Is the expenses there? Is my cash flow that I had planned, is it coming to fruition? So have that debrief with yourself. You know, what would you have done differently the next go around, or what will you do differently the next go around? Again, do not be afraid to ask your investment team for their opinion. Okay. This is only going to make your team much more solid, much more effective. So when it comes to the next particular deal that you're going to go through, it'll make the whole process a lot easier. Okay. So take that time. A lot of investors don't do this. They just celebrate and then they just move on. Take a moment and just do a complete debrief dump and just document everything. And before you acquire your next property, definitely review a lot of your notes so then you can remember things that you want to improve on this next acquisition. It just makes you a better investor. I still do this to this day. Still mistakes that are always being made, but I always want to make sure that I'm not making the same mistake over and over and over again. But it's a great way to make you a much more sophisticated investor, and you are learning by doing, right? Not versus just reading. And this is some of the best exercise that you can actually do, okay? So once you've debriefed it, the next step would be risk management, doing a temperature check. And what this really means is just keeping your finger on the pulse. And so the first 6 months is extremely crucial. And you want to be paying close attention to your acquisition and to your property. Is you want to make sure that you want to make sure that, again, is everything working out? Is my tenant working out? Is my property manager working out? So pay close attention. This shouldn't be something that you just now, hey, we've got it rented. I'm now going to move on to the next deal and I want to let it go. there is a misconception out there that real estate investing is passive. It is not. It is a business, and you got to treat it as that. And you should stay close to your business, especially for those that are just getting started and are learning this. Take the time for the next 6 months, make sure everything is working out accordingly and that it's working out well. And so the important thing is just making sure you provide that guidance and that reassurance that everything has fit accordingly. Your team is the right investment team. And if there are things that are not working, make sure you adjust and adapt. And so you might have to make some modifications. There may be some things that you actually have to do and change, but you just have to kind of adjust. But stay really, really close, because the easy part is actually the acquisition part, okay? Once you've acquired it, now the real work begins, and it's making sure that this property is following through to the objectives that it was meant to do, which is to help me get closer to the goals that I am wanting for myself, and that it continues to grow and expand on there. So there's a great question, is involving, from Cheryl, thank you again, is involving a joint venture partner a whole different session? Possibly, to be honest with you. Like, Cheryl, this would be your responsibility to be building your investment team and everything that's been associated up to this point. This is the real estate expert's job. This is what they do. The money partner technically is really riding on your coattails, and are kind of just making sure, are really depending on you to be doing all of the work and exercises to fulfill this acquisition, right? They're trusting you to do that. You've gone through this entire process. They're really there just to provide you with the capital and the financing approval there. So I hope that answers your question, okay? So risk management, stay really, really close. Make sure you pay close attention to this to make sure your investment team is working for you, okay? So next, the reality is right now, this can still feel like an overwhelming process. And we've just kind of quickly briefed the steps that you should be taking when you're acquiring your first investment property. It still may seem overwhelming, but the important part is you don't necessarily need to look 8 steps ahead. You just need to take the very first step, okay? And the very first step is just kind of understand, have that clarity of your goals. Start to build the plan. You design that roadmap of what is it you're needing to do to get to those specific pieces to get me to that end objective. And that's what it is. So don't get caught up with 20 steps ahead, okay? So I can't enforce this one enough as I conclude this presentation. You don't want to get caught up with what the Joneses are doing. Those bloody Joneses, you know, those guys that are buying 20 properties every single month and they're posting it all over the place on social media, and I wish them all the best and it's huge success. Go at your pace. It doesn't really matter how fast everybody else is going. The important thing is just, it matters how far, it just matters where you're going. And if you need a little bit more time to take those steps, that's okay, but keep pushing forward. Look at those things. Get your pre-approvals done with your mortgage broker. Have your investment team built. Start to look at your investment, start to look at different areas that you're looking to invest with. Don't get so caught up with what everybody else is. The important part is stay true and clear with your goals and the vision that you're trying to accomplish for yourself, and just follow those steps accordingly. And that's the natural process for all investors that have begun. We all have to continue to learn as we progress in this journey called real estate investing. As you move into single family and you just get started in single family, it's quite a learning process. And once you overcome that, it's great. When you get into multifamily and apartment buildings, it's like starting all over again, and you're relearning the whole process yet again. So don't feel that you can't do this, because you can. Just follow the steps, keep pushing forward. Don't get caught up with analysis paralysis, but continue to grow and really push yourself. The reality is you guys are all here. You're all paying attention. It is a Tuesday night, and you guys are watching this because a lot of people are wanting to grow and to learn and evolve and get better at this, because the clear thing is you all have goals that you're wanting to accomplish for yourself. So I go back to you as, how bad do you really, really want this? You know, really ask yourself. You are started real estate investing for a specific reason. Okay, you saw an opportunity, you've looked at this, this provides you a path to get you to that specific goal. Start taking those first steps to kind of push you forward, okay? So you don't have to see the whole path. Stay focused on the destination and take that next step. Like the analogy, the destination is Cancun. How are you going to get there? There is no GPS, only a roadmap. Take those steps to kind of get you to the place that you need. But again, how bad do you want it? If you're just sitting on the sidelines and waiting and not wanting to push things forward, and you're very nervous and very scared, make sure you reach out, make sure you engage, make sure you talk about it, make sure you research, make sure you're doing a lot of learning like you even hear today. And I appreciate you guys all coming out tonight and listening, but take that step, push it forward, take those little steps to help you progress up that chain. You don't necessarily need to see 20 steps ahead. Okay. So with that being said, I'm going to end this presentation. I want to thank you. That was a fast 1 hour presentation. So thank you guys all for joining. I hope you guys were able to learn a few different new nuggets. And for those that are just getting started, hopefully that helped provide you some support, or even better yet, maybe give you that kick in the you-know-where to kind of get you going. So at the end of the day, I just want to thank you guys very, very much for attending. Stay tuned for a future presentation in the very near future. Lots of really exciting things happening here. And at the end of the day, thank you guys for partaking. Give us a thumbs up. Hope you guys enjoyed it. And we will see you at our next live training session very, very soon. Have a wonderful evening, everyone. Thank you very much.